Hello and welcome to our weekly review of the financial markets. We expected this week to be rather boring, with a weak economic news flow and a long process to know the winner of the US election. Well, not at all. Over the weekend, a clear majority made Biden the 46th president of the USA, and we got news that Pfizer found an effective vaccine. Couple of things to be highlighted here. First, what a shame this breakthrough wasn't released the week before. Secondly, that vaccine, as for Moderna's one, needs to be transported under strict frozen conditions. So far, Pfizer, even if the vaccine is not yet approved by the FDA, would be able to produce 50 million doses by the end of the year. Europe and the US have ordered 600 million doses altogether. That equals to half of their expected annual 2021 production. Such a news triggered a sector rotation on the equity market, a long-awaited one, favoring cyclical sectors like oil and banks. However, the record high number of cases and the absence of any strong solution to curb the virus spread in the short term is likely to favor, again, tech stocks. As shared by major central bankers, we are not out of the woods yet. Techs are nonetheless under the radar, as Xi Jinping delayed Ant's IPO and hit the fintech branch of Alibaba's Jack Ma empire. Not good at a time when China is opening its capital markets to foreign investors. All in all, the glass is half full, and US employment figures were even better than expected, fueled by massive, short-term, temporary and precarious jobs, pushing long-term yields higher. Not so great for the upcoming US debt issuance. Let's see whether Captain Powell will signal any control of the longer maturities at his next speech mid-December. So what are we going to focus on next? Stay tuned as we will unpack the US Q3 GDP and unemployment next week. Have a nice weekend ahead.